Welcome, everybody, to Dave Cooper Live Monday Expert Interview. And man, do we got a show for you today. Curious about the ins and outs of modular construction loans? If you're an owner, if you're a developer, a contractor, or a builder seeking answers, your search ends here. Today, we're going to reveal the secrets of financing modular construction and clarify the differences from traditional loans with our guests, Z Mirza and Itai Timna from US Modular Capital. But first, before we get into this, we got to thank our sponsors because we cannot bring you all of these innovative conversations without them. Stream Modular, the only logistics company you need to transport your mods, pods, and panels. Our friends at Stream Modular are investing $50 million over the next 25 years to build the technology, solutions, and trailers needed to handle and transport the projects of today and meet the demands of tomorrow. Reach out to their team at streammodular.com to discuss your next project. CombiLift is the largest global manufacturer of multi-directional forklifts and straddle carriers, a leader in long load handling solutions, offering a free warehouse and site optimization design service. CombiLift helps companies of all sizes and from every industry maximize the capacity, safety, and efficiency of their warehouse and storage facilities. A big thank you to Paul Short and the team at CombiLift for helping us all to build it better. Visit them at combilift.com. Brave Control Solutions, where offsite manufacturing systems that do more than just improve productivity. They have a unique approach to industrialized construction, a lineup of flexible automation systems specifically designed for the construction industry, empowered by CAD to Fab, and turnkey solutions for 3D volumetric assembly, structural insulated panels, finished wall assemblies, MEP component processing, assembly, kitting, and storage. Learn more at thinkbrave.com. All right. Thank you to our sponsors once again. Make sure all of you go out there and thank them as well by visiting their websites and reaching out to them. All right. Well, without further ado, let's bring in Z Mirza, who is the CEO of US Modular Capital. And also, we will bring in Itai Timna. Hey, Itai, how are you?
Hey, pleasure to see you.
Listen, this is a conversation. David, good to see you. Yeah, excellent. This is a conversation that is a long time due. So one of the biggest questions we always get asked on this show is, how do we finance modular? The traditional banks are a pain in the butt to deal with. They're having a hard time. They can't find the lending sources. But I think you guys have some ideas about that, don't you?
That's what we do day in and day out. That's the focus of our business.
Awesome. Well, go ahead, Z.
I was exactly going to say that. That's all we do. We provide construction lending for modular construction. That's all.
Yeah, perfect. So we're having a little bit of a delay on your internet there, Z, just so you know. But listen, we got a few moments to work on that because right now I want to know everything about both of you from the moment you were born to this very moment in time. Do not leave any of the good stuff from the hospital, or we will have somebody on this call that will embarrass the daylights out of you. We want the truth and only the truth. Anyhow, Itai, let's start with you first, and then Z will hop over to you.
Perfect.
Go ahead, Itai.
Well, so again, Itai Timna, Chief Revenue Officer for US Modular Capital. I started off in a completely different world as a research biologist. So loved systems, loved figuring out how things work. But decided I didn't really want a PhD in molecular biology. It wasn't really my path forward. So ended up doing a Master's of Architecture, really enjoy architecture, understanding how buildings work, how they come together, and spent a number of years working for some large architectural firms, then transitioned to working with some general contractors, which led me into the world of modular construction. So like a lot of people in this industry, I started with ModSpace, which then became WillScot. I did my own thing for a short time. And then for a number of years, most recently, I was working with Vesta before I started here full-time with US Modular Capital. So, have been in the trenches, have seen projects all across the country, from the early design phase through the logistics, talking with local officials, with developers, with architects. Really enjoy kind of that entire process of understanding how a modular construction project works. And lo and behold, Z and I, our kids go to school together. So we met through our children, truthfully. And, play date here, play date there. What do you do? Hey, what do you do?
Yeah.
I was telling him about how our industry is amazing, but, it was interesting to me how little available financing was there.
Sure.
And it was also very interesting as we've looked back to see how our industry is very much dominated by government, state type projects where financing really isn't an issue. And that doesn't make sense if you look at the construction industry as a whole. So Z, being an analyst, and I'll let him explain himself in a minute, but put on his little thinking cap and said, well, that just doesn't make sense. There's no way you can't have capital. And after a few months of back and forth conversations and convincing him that, yes, we do have an issue, he said, well, let's figure out how to make this work. So he and I started talking and thinking about how we could make financing more readily available to the developers, the builders, all the people in this industry that really want to make these things happen.
Sure.
And it's not a simple process. We've learned a lot about how banks operate, how private lenders operate. And well, I should say I learned more. He probably knew a lot of it beforehand, but I understood the construction industry pretty well. He understood the finance world very well. So when we were able to really sit down together and discuss the problem, we feel we've come up with a wonderful solution that works very much like traditional construction finance. So it's familiar to most developers, but works with the nuanced differences in the world of modular construction.
Sure. Perfect. And Z and I got to party a little bit out at Mod Logic in Pennsylvania at the opening of their largest permanent modular hospital built ever in the United States, which was pretty cool, wouldn't you say, Z?
That was a fantastic project. It was amazing walking through it.
Yeah, it truly was. You don't get it until you get it, right? You got to see it to believe it. One of those things. Z, why don't you take a little bit of time here and give us your background, and then let's jump into this conversation. The floor is yours.
That sounds great. So I'm Z Mirza. I'm the CEO of US Modular Capital. I graduated from MIT studying strategy and operations and spent about 10 years working in industries, figuring out how to grow companies, how to turn them around, and understood very well, how to figure out an industry and how to work and, work with management teams and really grow businesses. And then for the last 10 years, I've been working in private equity and credit. And for the first time, I actually understood that you could have a great strategy, you could be in a nice industry, but if you can't really get the capital structure required to grow your business, then strategy and tactics and industry and all that stuff is fine. But really trying to figure out how to create the capital structure for a business so it can grow and thrive. So did that, work for some of the largest hedge funds in the United States, in New York, and was as Itai said, we had this chance conversation where Itai said, here's an industry which seems like really great, but we just can't get the capital financing to start these projects, and we lose a lot of customers. And in my world, if you're sitting in New York, money is never the issue. The real issue is if someone has a good idea. And this seemed like a great idea. Modular construction on the face of it seems great. It's the way to solve the housing crisis in the United States. It's a way to create lower income housing. It's a way to create manufacturing jobs, housing equity. All of those things seem great. But if we can't get the required capital structure for it, we have a problem. So, as Itai said, I put my thinking cap on, really learned the industry. And we believe we've come up with a solution that no one else in the industry has today, which is really focused on modular construction and that gap where banks and other funds do not want to take the risk of financing modular construction. Once construction is financed, a lot of banks will step in. But we fill that gap, that that break in the market where nobody is focused or nobody wants to take the risk.
Yeah, for sure. So let's talk about that gap a little bit, right? And walk me through the process. I'm out here, right? First, who's the customer? What's the size of the project? And then walk me through how you do your lending versus how a bank does it, so everybody can really understand the value proposition that you're bringing to the table. And Itai, you can start off with that if you like.
Sure. So I'm actually usually one of the first phone calls people will make. So whether they find us online, through a manufacturer, through another developer, through a friend, what we do is we work with all of those entities. So we're financing the developer or that entity, but we also work very closely with manufacturers, because really, if you think about how modular construction works, everyone has to go through a manufacturer, obviously. So we want to find relationships with some of these top manufacturers that are out there that a lot of us work with, and build those relationships so we can speed up the process for them. So if you're a developer, we actually want to work with you and help you create the best product possible, because we've all heard problems with manufacturing or with logistics or with the installation, but we feel that we have kind of a unique blend. So our core is a finance company, but we also have the ability to walk people through that entire process through a consulting process, which reduces our risk, thereby reducing the client's risk. So we can start much earlier than a traditional finance company. So they can call us and say, hey, we know that we need modular because, why do people use modular? I think the number one reason is speed and efficiency, right? So how do we do it? We're a successful developer. We've built plenty of multifamily projects or senior living facilities or whatever that project may be, tract homes. We want to be successful. One of the first things they call us about, though, is obviously financing. But we explain to them that, hey, financing is obviously a part of the puzzle, but we want to make sure that you're successful throughout that journey. So we work with them to ensure that they have architects that understand modular construction. So the design is put forth in the best fashion to increase the efficiency of the project. We explain to them that every manufacturer doesn't work the same. We explain to them that, logistics is a large part of the puzzle. You don't want to get a manufacturer 1,000 miles away from your project. You also want a manufacturer that specializes in your specific project type. So unlike a traditional lender, we really understand the process, and we work with those developers to make sure that they've thought about all those angles. And obviously we lend money just like everyone else that is a lender, but what we do differently is we lend in this circle of modular construction. So that is all we do. We don't finance traditional construction. I mean, if there's some traditional aspect to the project, that can be brought in. But when a bank looks at a lot of these projects, they don't understand modular construction. And without getting into the nuances of regulatory capital and those things within the bank, we work around those issues as a private lender. So we have the ability to finance things such as those early deposits for manufacturers. A lot of people will say, well, that's a massive part of my expense, and I spoke to my bank and they're going to give me a loan, but their money doesn't get released until the building's on site. A building could cost 40 to 60+% of the project. Well, that's a lot of money coming out early. And if that's the case, then that developer may have to bring in additional equity partners or find other ways to get equity, or maybe not do a second project that they were intending to do at the same time. So we try and make it very much like a traditional construction project, where once that equity portion is, whether it's a 70%, 30% loan to cost, whatever that number may be, when that developer puts their money in, once they've reached their 30% equity, or again, whatever that magical number may be for that project, our money will follow no matter where in the process they are, whether it's on-site or off-site. We also have the ability to work with the manufacturers. We understand the manufacturing process, so we're able to inspect buildings within a manufacturer and see that process. So again, our goal is really to finance modular construction and reduce the risk of those developers.
Sure.
I can keep going.
Yeah, no, I'm sure. I'm sure. So Z, talk to me about who the client is. Like, is there a certain type of job that you guys look at? Is it when you say multifamily developer builder, are you talking single family homes, or are we talking only single family homes if it's in a development of 50 single family homes? Are we talking, modular hospitals, modular hotels, or multifamily? Who's the customer, or does it really not matter?
Well, we don't serve consumers because we're not in the mortgage business. But outside of that, it's really targeted at the developer. Now, the developer most likely will either be a multifamily developer or maybe a hospitality. It can be healthcare services. We have clients who are building old age homes. We have clients who are building multifamily in different parts of the US. So the way we define our market is modular construction and a developer who typically does not have financing from, they can't call up Citibank and say, lend me money on my account. So those are people. That's where the market breaks down, and that's where nobody's really serving that market. So going back to Itai's comment, if you think about the customers we target, those are the customers that are underserved in the market. Now, historically, if you look at modular construction, things like multifamily account for maybe 20, 25% of the market. In theory, it should be actually, if multifamily developers had access to capital, which is what we're providing, it should form a much larger portion of modular construction. It's an industry that's completely given to modular construction. But the gap in the market is why a lot of multifamily developers do not enter the market. But again, stepping back, we're agnostic to who the developer is or who the borrower is. Our condition is United States. We focus on developers of modular construction, primarily modular construction. Every project has some aspect of non-modular, but really it has to primarily be a modular construction project.
So what are some of the most asked questions about modular financing? Can you give us some of the most asked questions, and let's work through them?
Sure.
So one of the things that people, sorry, go ahead.
One of the things we've got a delay.
Go ahead,
go for it. So one of the things we see from developers come in all the time is, they ask us for pricing. Yeah. They ask us for loan to cost. One of the things that we try to sort of make for our clients is also and this is also sort of improving the ecosystem of modular construction, which is we're there not just to sort of provide capital, but actually to be value-added partners with these developers. So when a developer comes in, we obviously want to understand who the developer is. We want to understand who the manufacturer is. We want to see their equity. But to really sort of understand how they're going about the project. Because as you can imagine, our risk is a developer's risk. If the developer fails, that's when our credit goes wrong. So we really want to sort of sit down with the developer and understand what's your business model, what's your operations, stress test their model, and then really help them if they don't have a manufacturer, get into the ecosystem. We have a network of folks who are in the manufacturing business. If they don't have an installer, we know those people. If they don't have somebody who's advising them, a true architecture firm that specializes in modular and knows how to design modular, we'll find all those relationships. Right. Sometimes what we see is clients come to us and they really haven't really built their plan around modular construction. They've basically done a copy and paste from regular construction and brought that to us. And one of the things that we try to work with them on is if you truly use modular construction, there are so many more benefits. There's timing, there's cost, there's quality, there's from an environmental perspective, to really sort of try to get that incorporated into their model. Because if it benefits them, it reduces our risk.
Sure. But let's and I see. Go ahead, Itai. You want to jump in on that?
No. I was going to add to what Z had mentioned. One of the things that we frequently see when people come to us with their models for pricing, that they're still unsure how to price a project that is built modularly. So essentially, what they're doing is they're taking their same model where it was 24 months of construction for building the same structure traditionally, where it should be, I don't know, 12 to 18 months for modular construction, but they're still extending that draw schedule over a much longer period of time. So even though on one side of their brain that they understand that it will be faster, when they put pencil to paper, they're still not comfortable doing it. So I think developers are still, they hear it, but I don't think enough people have truly experienced the benefits of modular to really to get it. And I've had the benefit of seeing it firsthand, how quickly we can do things, how efficiently we can do things. So that part of the process, it's a little different, like as a traditional lender, where we're not just talking money, we're really talking understanding the project.
Yeah, sure. So I'm assuming the first step of this process, and I want to walk through a complete lending cycle with you if we can. And Z, you were kind of saying it, right? You become partners with the developer or the builder. You want to understand the business, because if they fail, you fail, and that's not what you want, right? So to me, this sounds like a win for a developer or a builder, because now they actually have a financial partner that's vested in their project, not just in the money they can make while it's going, right? Because a lot of times the bank will lend the money, and then they're off to their other billions and billions of dollars of loans that are out there, and they play the numbers game. You, on the other hand, are sitting there saying, no, we're going to sit down, we're going to pencil the numbers with you, we're going to make sure this thing works, we're going to work with the manufacturers. Walk me through all the steps, and if I'm a developer or builder or developer, whoever, how do I do this with you? I'm ready. I'm ready, man. Lend me some money, Z. Come on.
So a developer will have a project. He's typically bought a piece of land. He has an idea of what he wants to build. A developer may come to us at that point, which is, hey, I need to sort of structure the financing before I go further down this track. Or they may actually have already built the plans and then come to us. Typically, we want a developer who owns the land, has equity raised, has at least a high level plan of what their construction project wants, they want the project to look like. Now, at this point, they approach us, we kind of look at their operating plan, look at their financials, give them a soft quote on this is what we think the amount of debt this capital structure can bear. And this is kind of how it's going to play out over the length of the loan. Then we'll spend more time getting into more detail with them, looking through, doing a deep due diligence into their budget, their manufacturing plan, their on-site plan. And we have an entire risk department specifically devoted to understanding modular construction, and that's how we reduce our risk. At that point, we will come back to them and give them a hard quote on what our financial numbers look like. Now, there are a number of modalities in here. One of the things that we find very often is when we're looking at the manufacturing plans, or when we're looking at the construction plans, that these plans have really, and Itai alluded to this, have really not been structured around modular construction. And I'll give you an example. A project that Itai has been working on over the last couple of months, we were able to work with the manufacturers and reduce prices almost between 20 and 30% from where they started with. Another project we have in the hopper, when the client came to us, they had a manufacturing bid. We looked at it and we said, well, the design's not exactly right. Found a new manufacturer through our consulting network and reduced prices by about 10%. So one of the things that we also look at is, does this plan make sense, and is there a way to reduce the cost? And again, from our perspective, if we were not really engaged with the relationship with the borrower, we would say, okay, great. The more it costs, the more we can lend you, and that's great for us. But honestly, what we want is a very healthy developer, right? So we sort of take it upon ourselves to say, hey, we're your partners. We're telling you that there's a better way to build this mousetrap, right? And we can find you a manufacturer, we can find you an advisor, we can find you an architect, and let's all work on this and make this more successful. So we're able to sort of get in there and really help the developer. And part of that partnership is actually also our partnerships with manufacturers. So if you think of our strategy, it's developer's relationship. That's a borrower. We want to know borrowers. We want to make sure that they are good builders, they have experience, they have good projects, but also longevity, because we want to do business with them over many, many years. And the same thing with manufacturers. We want to get to know the manufacturers. They'll send business our way, we'll send business their way. But really, a good manufacturer is risk reduction to us. It's very profitable for the developer because they're getting quality and they're getting lower price. So we'll try to make those connections and be part of that.
Sure. So who are the developers and how are you connecting with them, or are they finding you?
Itai, do you want to take that?
Sure. No, it's both. I mean, developers could be, again, it's not going to be, as Z mentioned, the massive developers that simply go to their bank and have a giant line of credit. It's the small to medium developers that have projects anywhere in size from 5 to 100, maybe even a little more $1 million. And obviously a $5 million project and a $200 million project are structured differently, but it depends. So, we're probably, some of our smaller loans might be closer to the $5 million size. But again, those are also, we'll look at smaller projects where it's a programmatic project where someone's like, I've got this project here, but immediately after I finish that, I've got this. Because we spend a lot of time, as we've mentioned, getting to know our clients, the whole KYC. But it's not just knowing your clients, it's knowing your manufacturers and your partners. So once we've built that relationship, it makes it much, much easier for us to loan. So I think it's almost double the work of a traditional loan, because in traditional construction, if there's a problem, you just find another general contractor, kind of. It's never quite that easy, but It's very difficult once you're committed to a manufacturer. So we want to really work with that. So again, is it someone, a developer that's done a few senior living facilities and is looking to expand? Is it someone that, has done some multifamily and is looking to expand? Maybe they've done a modular project or two. Most of the people we see don't have that much experience doing modular construction projects because, let's be honest, there aren't that many out there. Those that have done it are starting to become more and more prolific. But it's complicated. If they can't find financing, they'll quickly stop. Or what we've heard from many manufacturers is someone might go very far down that path, spend a year plus with the manufacturer getting everything designed, and then realize at the last minute that there isn't financing available, at least in the sense that they thought it would be. So It's a lot more equity. So we're working with those people that are trying to figure out answers and create solutions.
So let me ask you this then. Is the lending for you guys different based on the sector? For instance, like, is financing a healthcare project different from maybe financing a multifamily or commercial project?
I mean,
it's not
overall, go ahead, Z.
So from a lending perspective, it's not fundamentally different, but how we perceive the risk of the developer is different. So if you're a developer, you're building a $10 million multifamily, we want to make sure we understand the market, we understand, who's going to be living in it, what the operating model looks like.
Yeah.
If you're a hospital system and borrowing, $80-100 million, we want to make sure that, we understand your revenue model. But honestly, that risk is very different. Our rates will reflect, that change of risk. But the process is not different. How we look at the underwriting part, and we have a chief credit officer. She has almost 30 years of experience in it. She'll really get into the details of it, so she'll underwrite it differently, but the lending process is fundamentally the same.
Got it. And what about traditional lenders? Are they calling you guys? Are they looking to you to help them figure out, or do you advise them, or are they the enemy?
No, we have no enemies. Honestly, we want this industry and this sector and the ecosystem to really grow. We believe this industry is growing at 20-25%. There's more than enough for us, many lenders, equity providers, developers. This is a very positive direction that the industry is taking. What we do find is traditional lenders, banks, have difficulty getting their arms around this industry.
Yeah.
The risk associated with the industry is higher. The regulated structure makes it difficult. Where we have partnered with big institutions is if a developer comes to us and they want a construction loan. Remember, we're providing that sliver of the whole process.
We lost him there. Pick up.
I'll jump in, but yeah. So what he was saying is, so those lenders are coming to us because they might not understand the modular construction portion. So again, we may help them with that. A lot of times, a developer may have a broker even that they're working with, and they've hired that broker to find them someone to lend them those dollars. So we'll work with those brokers to create a package for their clients. So again, whether it's a broker or a developer, we can work in either of those scenarios.
That's great.
And we have banks. Sorry, I got cut off there. We have banks who will come on the back end of our lending. We have partner banks who will take over the loan or take out loan and provide sort of more stabilization or even long-term financing, because that's the business they like to be in. If I'm a bank or an insurance company, I want to hold that credit for a long time. What they don't want is that construction risk of modular. So a lot of times when clients come to us, they actually have a friendly bank. They've been working for many, many years. In the recent past, it's a little bit weird because regional banks have really pulled back.
Yeah.
But typically, they will have a friendly bank they've banked with for many years. That's their banker. And they will use that as their takeout financing. And if they can't find that at the moment, we have like large institutional banks who will step in and provide that takeout financing. So again, we see them as partners, and that serves an important part of the process, because ultimately, when we come out, we need to make sure that the developer has a capital provider to take us out. So we see them as partners.
To add to that, I think it's important to focus. We focus on the early portion of the construction project. So we're taking it from that original factory manufacturing portion, breaking ground early on, all the way to a certificate of occupancy or whatever that last step will be before occupancy. So at that point, again, as he mentioned, a separate institution would probably be coming in for either the stabilization or that long-term financing. So we're kind of a short-term, or you could call it bridge, whatever type structure.
So what about land and the project overall? Do you guys finance only on the modular portion of it? Let's say above foundation up, or do you finance the site work as well as also the purchase of the land?
So that's actually a great question. So again, going back to our fundamental sort of simplifying the model for developers and how we view our clients, if we underwrite a project, we believe in the project. We're not just underwriting the modules or a piece of the project. So, we have to like the project. We have to trust the developer, and then we have to trust the manufacturer, and then we'll underwrite the project. So in a situation where, let's say, the loan to cost is 70% loan to cost, well, in that case, the first $30 are from the developer, and starting with the $31st, it's our dollar. And it doesn't matter whether that's going towards a module, whether that's creating a podium, or doing some horizontal development. Anything that's in the project, we underwrite and we provide capital for. So that's actually an interesting difference between us and traditional lenders also, because traditional lenders will typically not provide financing when modular construction is going on, or they will do it in tranches as different stages of construction are going on. We don't differentiate that. We kind of say, here's the project, here's the risk we've underwritten, we believe in the developer, and we will be partners in that capital stack as the whole project goes through.
If I can add to that, it also makes it much easier for the borrower. By having this unitranche type loan, they don't have to deal with multiple lenders if they need an extension or when they're trying to get their takeout financing. By having a single lender like US Modular Capital working with them, that entire process is easier. They're speaking to one entity and negotiating with one entity. So that's a significant difference than breaking it up.
So Itai, being the chief revenue officer here, how are you guys protecting yourselves, right? Traditional banks and lending, there's factory visits to make sure that your money's being spent right. There's job site inspections. There's progress payments. Is it really the same process? If I am the builder or developer that as a traditional bank, how involved are you and how do you protect your assets?
So yes, we're very involved. So as we mentioned from the early stages, we want to know who the manufacturer is, who the installer is, who the transporter is. So that's the modular side. We understand that once it gets on the construction site itself, it's very much like a traditional loan where we will see the progress. It's a draw schedule. The biggest difference is really the front end, where those early deposits are required. We have the ability to make those early deposits, obviously assuming we've approved the loan, to allow the manufacturer to not have to become the bank. Because let's be honest, a lot of manufacturers, have learned they can't charge the deposits they really need, and that makes them either up their price because they're having to borrow money, or they're acting like a bank and they're losing money because they're not structuring it correctly. So really, we're out there to help the developers because we want the developers to build, obviously, but we're also there to make the manufacturers' lives easier because now they're dealing with financial institution paying the bills as opposed to a developer that they may have not worked with before, and that doesn't understand the process.
Z, I got a question for you on that, right? Manufacturers, I met you, you were out at ModLogic, and that's when we started talking a little bit further. What about being certified as a manufacturer or a preferred manufacturer? Is there a way for the manufacturers to also partner with you and your team so they have opportunities for work that's coming in or people are contacting you for projects? Why don't you walk me through that?
So, Dave, thank you for bringing that up. We're actually in the process of launching a program because as we're going around and making manufacturer relationships, one of the things we've realized is that there are manufacturers who are head and shoulders above in terms of quality, in terms of expertise, and we want to partner with them. So we're starting a Gold Star program, and that's why actually I was visiting with the folks at ModLogic, very high quality factory, very high quality company, great management team. What we want to do is create that roster of partners where we say that, if you're working with any of these manufacturers, we're good to go. We believe in these manufacturers and have audited them. We know them. We trust them. That's actually a pretty important part. With those manufacturers and with other manufacturers, we still have a due diligence process where during the construction, we would have somebody visit the site to make sure all of it is going according to plan. But with our Gold Star manufacturers, the expectation is it's an easy underwrite because we know them and we trust them and we have confidence in them.
Well, and so and I think that's super important, right? Because it's going to speed up the process for you and your underwriting and how you go about it. But it's also going to help us speed up the process on the manufacturing and design side, I would imagine, which will make everybody more competitive against the architects and the site builders. Speed,
that's exactly right. When we speak to manufacturers, one of the things they talk about is, they get a number of developers who come in who really haven't experienced modular construction before. And they'll spend time with them trying to sort of build around the project and advise them on the project. And then the developer realizes that they don't have the financing. If we're partners with a manufacturer, they know that, the process will be speedier because we don't have to come and do an audit of them. That's already been done. Yeah. But the other part is they can actually send them the developer our way and say that, hey, before I spend a lot of time and my sales time, my design team's time, please go and speak to US Modular Capital. Here's Itai's number. Call him up, talk to him, try to figure out how much financing, if you can get financing for this or not. And we'll provide a soft financing quote because we'll look at the plan and say, okay, this kind of makes sense. Here's kind of the numbers. Now you can start working with the manufacturer. And the manufacturer is pretty sure that as long as we can underwrite and as long as you're within some parameters of risk, this will go forward. So it reduces the risk for the manufacturer and also speeds up the process for them so they're not losing time with the developer who may not be able to, frankly, get the financing.
Yeah, for sure. So, one of the things is, everybody's talking about industrialized construction, modular construction, panelized CLT, whatever we want to call it, modern methods of construction. Z, you have a background from MIT, so this is going to be one of those, that's a really cool school and a great background. So I'm going to ask you this, specifically because there's a lot of out of industry leaders coming into this space currently. but yet there are so few lenders in this space. Everybody's talking about the growth of industrialized construction, but it doesn't seem like they've really bought into it yet. Or wouldn't we see more lenders getting involved in this space?
So, change is difficult to understand when it happens. And I don't think a lot of developers fundamentally understand the risks associated with it and how to mitigate those risks. We've spent more than a year understanding the market. We mapped all the risk factors. We built our legal documents. We built our credit policy, our credit models, our risk models are specifically built around it. We believe as the industry expands that more lenders will come in. Why would they not? And we actually, welcome that, because that is very healthy for the ecosystem and for the growth of it. Like if you think about it, in the size of the industry, the construction industry in the US is about $1.6 trillion. Out of that, the amount of construction categories which Modular can address is somewhere around $470 billion. Today, modular construction is about a $12 billion industry. There's tons of opportunity. I mean, the headroom here is dramatic. And why would it not be? When you speak to the people in conventional construction, it's difficult to find labor. Costs are uncertain. We live in times when developers want their product much faster. So organically, the industry's got to grow and the capital will follow.
Yeah, for sure. So let's go to some comments and questions if you guys want, and then we're going to wrap up with your final comments and questions. So let's jump into it real quick, and let's see who is joining us out in the world today. It's quite a few. We're running out of time. Doug Hayden says, very good information. Good to see you, Doug Hayden. Thank you for joining us. Dr. Brett Mussin's writing a book here. The biggest finance challenge I found is that modular buildings are private property until the entire building is constructed and attached to the ground before becoming real property and eligible for real estate financing. This conversation is just beginning, so maybe you'll already have talked about this by the time this question is read. I don't know if we really covered all that, did we?
Well, I think what he's getting to there is the whole chattel versus real property issue. And as he mentioned a moment ago, our loan documents are written specifically to accommodate that risk. So that is the reason we are able to lend directly to the manufacturer and while the project is still offsite. So that is an issue for the majority of larger financial institutions, that whole lien risk. And we as a private lender have no issue working around that.
Excellent. Dr. Mustin, good to see you. Thank you for joining us today. All right, Henry Mickelberg, question. So this appears to be how finance modular construction projects in the U.S. because it's different lines of credit, etc., and particularly Beastie, he says. Assuming that you are using your expertise in the modular industry to manage the esoteric, why can't you give me words, Henry, that I can say? Esoteric risk, I assume that your risk is predicated upon having approved for payment systems tied to granularity of line item milestones. Thoughts on that?
Not
so
well,
great. Go ahead, Peter.
I would say actually it depends. In the traditional construction, once you're on site, yes, there are those line items, but at the manufacturer, you can't bill in that fashion. Again, part of the reason we have to work with manufacturers that we trust is because those manufacturers have to do what they said. And the way that the modular process is set up, they need to bill early prior to any actual work being done. So again, back to that point, we have spent countless hours fine-tuning this process and not to give away our secret sauce, but we are very comfortable with that early lending process that allows manufacturers to get their money on time and allows developers to have to put up less equity than they would with other financing options.
Excellent. Thank you, Henry. Thank you for joining us today. Mac Norrie in the house. Are the rates similar or more aggressive than the traditional construction finance? There you go. That's the big, the beast in the room right there. Talk to us.
So
No, go ahead, Z. I'm sorry.
So the rates are competitive, guys. When we say that we spend all this time mitigating the risk, understanding the manufacturer, understanding the plan, let me step back. There's really two ways to mitigate risk, right? With traditional construction, with traditional lenders, what they'll do is they drip pay your payments over the life of a project. So a traditional construction project, let's say, is running 18 months. The payments coming, the milestone payments coming are in small drips, and that's how a traditional lender effectively manages risk. Because if something goes wrong, they come and look at it. They send somebody on site for each stage. They only approve payments after that, and that's how they mitigate their risk. If something's going wrong, they find it. They only have so many dollars in. They'll stop it to try to fix it. We're actually a very fundamentally different type of lender, and the reason for that is because modular construction is a very different type of construction. There is no milestone payment, right? You can't sort of say, this is the amount of money I'll give you when the walls are up or when the seat, when the window frames are in. You actually have to understand how modular construction is done. And that actually costs more money because we have to spend time really understanding the project. We have to spend time and effort visiting the manufacturer, making sure that we understand what they're ordering, how they're ordering it. So our loans tend to be, a little bit more expensive because we actually have to work around that risk and solve that for that risk. Having said that, we've run the models every which way. We have a group of analysts who will work through the financials that the developer provides us and make sure that the price we provide is actually competitive, both from a market perspective, but ultra competitive across versus traditional construction. And that has many elements to it. If you can finish modular construction 6 months earlier, we want to make sure that the economics that the developer is seeing, when he thinks of their economics and the cost of construction, they're realizing that their revenue is going to start 6, 8, 12 months prior to what it would in regular construction. We want to sort of show them our rates competitive to the market. We want to show them manufacturing costs relative to traditional costs, and all of them having a very holistic view of what the project financials look like is how we address it.
Yeah. Thank you for that question very much. Thanks for the answer, Z. All right, we got Tom Hardiman in the house. What's happening, Tom Hardiman? MBI, Modular Builder Institute, also puts on the some of the biggest modular events in the country. So Tom says, great conversation, guys. Thanks for hosting this call, Dave. Well, you're welcome. And I guess we'll probably see you guys at World of Modular this year, right? You better be, anyhow.
Definitely.
Good to see you, Tom. Thank you. All right, this is the last comment, and then we're going to wrap it up here. Greg Ugaldi, the past chair of the International Home Builders, NAHB, National Association of Home Builders. I said international. I'm losing my mind, Greg. Greg's got updates, President of the United States, on housing in this country a couple times a year, and also is a developer. He says, great job, DC Live. Can Z and Itai lend to a developer that wants to provide a modular home on a purchaser's lot? So we talked about that a little bit, but I guess the question would be, what would be the minimum number of homes a developer would have to deliver in order for you to work with them?
So realistically, we're looking for projects that go $5 to $100 and $100+ million. If it's a developer who's building one single family home, we're probably not the best provider of that because it's not a systematic, it's not a programmatic type lending program. But we've spoken to developers who may be developing a tract of land and they may be putting up 500 houses in tranches of 10, 20. We don't view that as, a 5-house deal or a 10-house deal. We actually think of it as, 100, 200, 500 single family home deal. So we're really looking for developers who are doing multiple houses. And if it's in a programmatic structure, then, we're willing to sort of be well below the $5 million threshold. But it has to be a developer who's doing programmatically single family houses or tract development. Itai, did I get that right?
Yeah, I mean, I think the best answer is, give us a call, shoot us an email. We'd be happy to talk to you and see what we can do.
And speaking of that, right there's the website, U.S. Modular Capital, investing in the future of construction. You can find them at usmodcap.com. Jen's going to get the banner up there below. And I just want to run through real quick while we have that up on the stream, because we have a lot of other people that did join us today. Just quick couple shout outs. So, hey, K9 Lover from YouTube was watching as well and made a comment. Thank you for that. Appreciate you very, very much. He said howdy from North Florida. And I think we had a couple more down below here that I wanted to just point out real quick. Jen, maybe you can find them for me. Let me see here. Oh, here we go. Hussein Gazini. Thank you. Hello, Anale. Appreciate you joining us today. I probably butchered how we say that, but everybody else out there. Sean Horton, thank you very much as well for joining us today. I know there's so many other of you. There's got to be about 50, 60 people live watching right now on all the channels. You guys are awesome. Thanks for joining us today. So, last question. We're going to wrap it up right here, right? So, why don't you tell me, who wouldn't you finance a project for? What is a major deal breaker for you?
So bad
Criminal
boys are out. Criminal background. Yeah, if there's criminal activity in the past, we just have red lines around knowing our customer and who we lend to. I think that's a pretty quick red line. And the other one is we don't lend directly to consumers. We only lend to developers. So if you're looking for a mortgage for your home, that's not our target. We lend to developers.
Excellent. All right, gentlemen, is there anything I didn't cover that you want to make sure I put out there right now before we wrap this up?
I think the only thing on that is if you have a question, you can shoot us an email, info at usmodcap.com, or you can go on our website, click on the contact page, and we'd be happy to talk to you.
That's it. And feel free to reach out to Dave Cooper Live. More than happy to make the connection as well. Everybody out there, make sure you hit that like and subscribe button if you're on our YouTube channel. And if you love this information, subscribe. Outside of that, you guys were awesome. Don't go anywhere. I'll come back to you after the outro. The rest of you, it's Monday. We got 4.5 days to build it better. So let's keep it going. We'll see you on the other side. I'm Dave Cooper. Thanks for watching.
Thank you, Dave.
What an amazing show. Thank you to all of our sponsors for helping us to continue to bring all of these innovative conversations to all of you out there. Please visit them, see what they have to offer you. And as always, subscribe to the YouTube channel and ring that bell. It would mean the world to us. I'm Dave Cooper. Thanks for watching.